All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny.
I'm Dylan.
And today we're talking about the fall of mighty Queen Cathie and how I made a little bit of money off of her, kind of reputation damage, I guess you could say, and an idea for how I might try to do so this week coming up again.
All right, so you're taking advantage of her failings.
Yes.
If you like this kind of entertaining stock market content where it's two stupid guys trying to figure everything out, give us a like and subscribe.
That will get to it.
Two Stupid Guys Trade Stocks.
Part of what's kind of spawned this whole video was this meme. I absolutely was uncontrollably laughing for 2 minutes after I saw it the first time.
Yeah, it's definitely it's definitely iffy. It's pretty funny.
Yeah. I thought so as well. And this right here background is actually your ARK Innovation flagship fund over the last 3 months. Just below all moving averages, just trending down and down and down. Where is the bottom? Here's this is the 1 year chart. Less than half of where it was before. And it's a fun thing to think about is when you're down 50%, it takes 100% gain to get back to where you were in the first place.
That just reminds me of my Fubo trade. It makes me feel good. The interesting thing here is Burry at one point was shorting ARK.
He was.
I bet he wishes he still was.
Yeah, I mean, too soon, right? That's basically how it turned out for him. Yeah. Such is life, unfortunately. This is 3 months, just powering on down. And it's all the stocks contained within it pretty much are on the same trajectory. All right.
Yeah, they're all like those high growth Roku, TDOC. She has a lot of PLTR, right? All those stocks, right?
Yeah, she sold 5 million shares of PLTR this week on Thursday.
She did.
She did
because she bought it 22 and it's at 12.
Of course, right? Did you see the Jim Cramer quote about her? I mean, Jim Cramer is Jim Cramer, so what we take from him is of limited, some substance sometimes. But do you see what he said? He said she trades like someone that just started trading stocks days ago.
No, man, that's pretty rough. Yeah, I mean, everyone was touting her name for a long time. The whole 2020, everyone's like, she's the greatest thing ever, and we're both like, just wait a little bit.
Yeah. By the way, we did a separate video looking at her, hedge fund that she was involved with back in the .com crash. We'll link it above so you can watch that. Basically, they lost 85% of their net asset value over the course of about a year. So this is an interview she did this week was on CNBC. I wanted to play the first couple of minutes here and kind of give you a little bit of context as far as where it seems she's at mentally to me. I don't know.
The criticism is rife right now. Your stock picking prowess, as I said, your research, which you are defending multiple times here. I'm wondering what you make of the criticism, whether you think it's.
Can you hear that at all?
Yeah.
Oh, I can't.
Gotten too personal. The fact that there is literally now an ETF betting against you. What do you make of that?
Well, I find that very interesting,
especially there's ETFs betting against her.
When you think about it,
the total capital, exactly.
A call,
which is
interesting. They're shorting innovation, and that seems to me over time that's not going to be a business. If you ask me, consider the source. But they're also not doing any research.
Wait for the counterpoint here in a minute.
Simply shorting innovation. If they were doing research and could point us to reasons why. What we have included in our portfolio is not going to participate in the new world order, then we might have a conversation about it. But the idea of shorting innovation in America is ridiculous, I think. But here's what I do.
How is Roku innovative?
What I do know.
Yeah, don't get me started on that one. That was the one I made money on this week.
Investor psychology. When I see people so sure that we are wrong, and that they are willing to set up companies simply to short innovation, and to set up funds to short innovation, that investor psychology, the pendulum, has swung so far in one direction that if we're right, then the rewards are going to be enormous.
I don't know how else to say it. They're not shorting innovation, they're shorting you.
Oh man.
Well, we stand for.
That was the part that I absolutely loved. The point here is, like she talks about innovation as if innovation guarantees great returns. Buffett actually talked about this at his most recent Berkshire Hathaway annual stockholder meeting, where he put up that slide of all the different car companies that had failed. Just because you were in an innovative industry, cars changed the face of the world. But
yeah, I remember that. There was like 150, like every company and their mother all just like started entering the space, just like EV companies. Like we had tons and tons and tons of EV, and now there's like already, in the course of a year, a bunch already shut down and not doing what they're doing. There's a tons of blockchain things. They just said the word blockchain.
The criticism
exactly
is rife right now.
That's the whole point, is that innovation does not necessarily drive actual value creation for shareholders. Is kind of my basic premise as far as that goes. And I think it's so funny that she's like, oh, they're betting against innovation. No, they're not betting against innovation. They're betting against you and the way that you value innovation.
Yeah.
I just was literally rereading her Tesla valuation today. The insurance business would have to be the number 8 in terms of revenue in the United States as far as automobiles by 2025.
That's not going to happen.
They don't exist at this point in time, but sure, it'll be one of the top 10 companies in the next 5 years. Cool. So this is Roku. This is the one that absolutely got decimated here. It's kind of hard to see the little width that it made.
I had this issue in my charts too. The volume covers up where it's at because it drops so low.
Yeah, exactly. I put in a little shorter term chart so you can see a little bit better here. This little green bar hiding behind this giant red volume bar is actually where the stock gapped down to after earnings. It was not a great earnings call for them. Obviously these companies were priced so highly in terms of multiples that they had to be priced perfection. They were coming into this with a 70 PE for a company that sells little boxes attached to TV at a loss. Don't get me wrong, I have a couple of them in my house, but Apple TV sells some product. Fire sticks are the same product. It's not innovative at all. But whatever.
They're kind of the third tier product of the market. And also the other problem you have is smart TVs essentially have the Roku built into them now. They like I have like LG TVs. It has everything I need. It has every app you can ever imagine. So I don't understand what they're selling.
Yeah, the basic trade here was that I opened this call credit spread at 160, 165, expiring for this yesterday, 218. The earnings report was on 217 after hours. I get $150 in credit per spread. My max loss would have been 348, and that would only been realized if Roku had spiked up to 165 or above. And then at the time I opened this spread, they were about a 150. So it was like a fair margin of safety, at least in my kind of judgment. Expired worthless. I actually tried to close it for $1, but Robinhood didn't fill it for $1 and just let it expire. Be careful letting your option spreads expire.
So wait, you just didn't get anything? Or you did get
no, I got the whole $152 max gain.
Oh, okay.
I actually offered like $1 to close the spread early, but Robinhood just canceled that order.
Nice.
Yeah. So I looked through our top 10 holdings here. Both Tesla reported was down the day after, and Roku's were now reported to have that major down day. There's a few of them reporting like this week. Unity Software was the only one that actually was up the day after they reported, and they actually reported, I would say it was a little bit early, like February 6th, I want to say. But there's quite a few opportunities here, and I was thinking about making this trade again, another bearish earnings play. All these stocks are in similar downtrends. So Square, Dylan has kind of been watching PayPal a little bit, and we'll see it from a valuation standpoint. But PayPal and Affirm have both reported already and got obliterated, after earnings. So why would Square be any different? Is my thought process.
Yeah, Affirm is real though.
Yeah, they got crushed. So they're currently trading about 96. I was looking at this 100 and 105 call credit spread, meaning I could collect $198 in premium. Max loss, and that would be a 302. That would be if Square were to pop and be above 105 by the closure of business on Friday. So that's an options play I think I'm going to make. I looked at it from a standpoint of expected value, And if I'm collecting this $198 and, you know, I only have about I would say, I think it's a 30% chance that this runs like, you know, my short call runs into the money, meaning that this has an expected value of $660 over the max loss of 500. So it's a positive expected value bet from my understanding of statistics, but you know,
All
we'll see.
I'll take it.
Yeah, it's an interesting idea. And then if you wanted a little bit more margin of safety, just in case like they actually happen to pop, I don't know, maybe Russia decides that they're going to back away from the table and the whole stock market rallies. You can also do the
so annoying. Jeez.
We'll see. The 110, 115 instead, give you a little bit more room. You know, kind of risk reward is not as great. This is now like slightly trending into like a it's about a break even. Is like I think it was a negative 0.5% expected value, something like that. It was a little bit under perfect as far as like a even bet, but you know, another option. Or if you want to go for TDOC video, we've actually done stock. We've done a video on here on this channel.
I would
before.
be more inclined to do TDOC, although I don't like that max profit, max loss.
Yeah, so I went pretty far away from the money though, right? Because like $65 share price, I went all the way up to 75. So you could definitely do something a little bit closer. But this is like the basic structure of the trade is where, you know, you're selling an option that's close to, you know, closer to the money, and then you're, you know, buying one that's a little bit further away as kind of an insurance plan in case, like, you know, the stock takes a run.
Right. Okay.
Yeah. So we're to give you, you know, exposure where you're the net seller of an option. You're selling a higher priced option.
Right. All right. So are you going to short ARK?
Not, you know, I didn't look at doing ARK directly. It's just more, I was thinking the earnings plays. ARK themselves is definitely something you could do, but you know, you also get the massive IV crush when you're talking about earnings. I forget if it was TDOC or Square, but one of them is like implied volatility is like 170%, just like literally off the charts.
Yeah. So that's going to be, you're going to lose a lot of money as time goes then.
Well, this is like a 1 week option. So
I hate 1 week options.
Well, but I am the seller of the 1 week option.
Yeah,
I'm not a buyer 1 week option.
I definitely need to get better at this strategy because I'm not good at these.
I think it's a good tool to have, especially like, you know, you're better with the chart analysis and stuff. Like, you know, earnings plays here. I'm just following the trend. You know, like all these stocks are put on a downtrend. You know, a lot of companies have been getting absolutely decimated after earnings. So like, you know, it's, you know, I would say that overall you're kind of going with the tide at this point. You're not exactly like fighting the market by making plays like this. So we'll see. I don't know. I'm thinking the Square one is kind of more appealing to me, but I'm not entirely sure yet.
I would agree. Square they have been just. I think they're gonna just continue to go down forever at this point. I don't know. It's pretty wild.
Yeah, at some point it'll stop, but like there's no signs on the charts of that arresting from what I can kind of see. Like, what do you think?
No, it's just a cascading downfall as of right now. So, and it doesn't help that the overall market's going down. That also hurts because then it just adds more momentum where you have previous resistance lines that might be able to hold it if the market started to have an uptick. But when the market's going down as a whole, it doesn't. Resistance lines don't matter.
SPY is like a 0.5% away from entering like a correction territory by definition. They're like negative 9.5%, something like that from their peak.
Yeah, they're going to get it like next week.
Yeah, there's a good chance, especially with the geopolitical risk that's going on right now too. So I don't know. Be a bear when it's time to be a bear.
All right. Thanks, guys. Hope you liked the video.
Yeah. Catch you in the next one.